The broadcast is now starting. All attendees are in listen-only mode.
Well, we've reached the appointed hour, so good evening, ladies and gentlemen. Good morning to our friends in the Southern Hemisphere. How is the volume? Here we are, Norbert. Oh, and Mick D. Good, got the volume. Thank you very much. You've jumped in front of me. Good to hear. Norbert, lovely to hear from you. I hope you're enjoying life out in your little property there with the beautiful fir trees. And Mickey D, good to hear from you as well, mate. We have a talk soon. Wonderful to have all of you here. Albert Z, tutorial guy, he's here with us. Hank, nice and fresh in the hunter this morning. I'll bet it is. Beautiful day on the Gold Coast, incidentally, folks. A beautiful blue sky and a couple of puffy white clouds. Pacific Ocean's looking splendid. Anyway, let me continue here to welcome you. Carol, special greeting. We don't have a lot of ladies, and we really, really like to have ladies. Colin's with us. Hank, we've said hello. Harold in Reading, the gold bug. Harold, you remember a couple of months ago I said that gold was a big chance of breaking out, and boy, isn't it roaring. It's fantastic. You must be very happy with it. Jay's with us. Justin's Hank's son. Good to have you with us, mate. Jen, good to have you. Ladies, yes. We've got Michael from Melbourne. Good to have you with us, mate. It's been a little while. The Murph over there, tutorial guy. Good to have you with us. And Norbert, of course, here's another one. Peter Mack, you too, Peter. Time we had a talk, probably. Terry Roberts, voice from the past. Good to have you with us, Terry. Hope you're feeling well and everything's going well for you. So great. Jim, thank you. Hello to you too. Okay, folks, so let's get started. Got an awful lot to talk about today. Let me just make sure that you're on the right screen. Where are we here? Must be somewhere. Here it is. Too many buttons to click, aren't they? Anyway, we're going to talk a bit about currencies today, and particularly the long-term charts. You're going to, just highlight some things for you. And we're at an extraordinarily interesting state in the markets and in the world at large. We've got this amazing situation with US markets at or near all-time highs, but the Fed still talking about stimulus. Normally, I mean, the classic mold is that you stimulate markets when they're in trouble. And we now seem to have gotten to a situation where the Fed's talking about stimulating the market further with lower interest rates, QE, every other thing, with the markets at all-time high. It all seems a little bit strange. Australia, the Australian markets finally recovered its 10-year highs, and the Australian, the Reserve Bank of Australia, our equivalent of your Fed, is signaling that it's lowering interest rates. On Tuesday of this week, Mario Draghi, the president of the European Reserve Bank, the central bank, said the same thing. He's open to more easing, more stimulation. And we've got this complete dichotomy between what the main US markets, equity markets, are doing and what the bond markets are doing, because the bond markets are signaling the complete opposite of what the equities are signaling. So equities at or near all-time highs in the US, different positions for other countries. We'll take a quick look at them. But bonds have gone, the 10-year has gone way past the dot plot, as the Fed gives, the dots, as the Fed calls it, signals to the market, intimations of what it's expecting. And the bond market is far more bearish than one would have thought. It's an extraordinary situation. Anyway, let's have a look at all the good things we've got here. and let's move on. So US equities, here we are, historic highs. The UK, the FTSE, staging a retest of a high-level failure. Germany's DAX is mimicking the FTSE. Australia's SPI, that's the share price index, that's a broad market index of the Australian stock market, equivalent to the S&P in the States. If you like, it's at a 10, 11-year breakout. China's got, as usual, this is a historic matter, that it's got its capitalist face in Hong Kong, which their chart looks remarkably like the FTSE. And China's local market, the Shanghai exchange, is just looking dreadful. And the US bond market telling a totally different story, with, as I said, the 10s way past the dot guidance on the downside, looking and suggesting 2, possibly even 3 cuts in the bond rate, in the Fed rate. Extraordinary that this sort of idea should even be being thought about at historically high equity levels. But we live in, as the Chinese proverb goes, we do indeed live in interesting times. Quite extraordinary. Let's have a look. Here's your S&P, and as you can see, it's roaring back up towards its all-time highs. But for those of you who've been following us on our ideas about the angular charts as opposed to a simple linear chart, this market is actually right now in a failure position, and has been for quite a while. It can cure that, of course, and if it does cure it, and I'm going to show you what the cure point is, then, extraordinary as it may seem, this market's going to go much higher. And you've got, of course, elections coming up in 14 months or so, the next year, isn't it? Presidential elections and Congress elections. Trump's great savior is a strong market. This market, he keeps it strong, and of course he's very much a low US dollar, low interest rate guy, and he's not afraid to tell people if this market is still strong, then you're looking at Trump having another term. If it's not strong, it could be in trouble. And this is an exquisite balancing point now. We've seen this big burst of volatility come in. This market's recovered from that, but this market is in a position that it can go either way. When you think about that in a rational sense, you say, well, why would it? The U.S. economy is very strong, the market's strong, wage growth is there, unemployment, excuse me, is very low. Almost all the metrics for the U.S. economy are very good. So why would we be thinking that this market might be in trouble? Well, the main argument is what the bond market is saying, and that will get resolved one way or the other. But it's certainly, we're in exciting times. Let's have a look at this next chart here. And this is the S&P on the angles. These dotted lines that you can see, for those of you who are not familiar with thinking at the Daniel Code regular. Daniel Code, folks, this is the Daniel Code trading channel that's controlled this market. In fact, it controls all markets right since the 2009 low. And you can see that the target to actually cure the angular price failure is way up at the highest dotted lines, about 3,000, somewhere near there at the moment. And I've made it a bit higher because it can take time to get there. That would cure the failure that's on the chart. But just exactly where the chart is now, you can see these 3 highs, these 3 tops together. It's not terribly, they're not entirely symmetrical, but this is very much like the 3 little Indians. Those of you who have been trading long enough that you spent a bit of time thinking about these classical chart patterns, which no one worries about now, I have to say. But that is a classical setup for a failure. So we're a bit of a tossed coin at the moment. We've got news to be hugely optimistic about equities, and we've got news to be a little bit cautious. So we'll just see where we come. Let's take a bit of a global look at a quick run around the world and see what these other markets are doing. This is the FTSE. This is the Financial Times index in London. This is the main UK index. And you can see it's had a failure, a pretty significant failure, and it's trying to rally back to support. And it would find resistance at the lower dotted lines. And that's very much the same. The three highs, they're all higher highs for this market, which is a little bit different, but it still gave us the failure pattern. This is the Hong Kong, the Hang Seng. Now, China has two entirely divided markets. First of all, this is the Hong Kong index. It's called the Hang Seng. And those of you who are interested in international markets will know that Hong Kong was, for all of its recent history, apart from the last few years, a British colony. And it became a huge source of investment, and it was financial, still is, it's a financial powerhouse. And you can see that this index in Hong Kong has recovered its trend line, and it's working its way up. It's in a very strong position, despite the fact that it's having, connuptions over China policy. What's happening over there is that Hong Kong, when it lost its independence, China wouldn't renew the leases, the many long-term leases that the British had over the land on the landward side of the island, and Britain was forced to give Hong Kong its independence. Well, it wasn't independent; they in fact handed it back over to China. So it's now a Chinese province, and it's subject to what's called one country, two laws. The deal that was made between China and the British for the benefit of the Hong Kong population is that they would retain a high level of autonomy separate from mainland China, that they'd have their own legislature, their own laws, and of course their laws are British laws because this historically has been a British colony. So the folks there have the right of habeas corpus, trial by peer, trial by jury, the normal rules of Western jurisprudence that we expect in your country and my country, most Western countries. Of course, none of that has actually, or very little of that's actually remained in place. That China appoints most of the people to the Hong Kong governing body, and the governor at the moment is a lady called Lam, and that on behalf of her Chinese masters, she's brought some legislation to say that Hong Kong citizens can be extradited to China for trial on a rather wide range of potential charges. Now, China, of course, doesn't have the British system of justice. Pretty much once they grab you, you're at the whim of whatever it is that they want to do. And, of course, that's caused a fair bit of heartburn in Hong Kong, to the extent that there have been literally millions, crowds, huge, massive crowds, biggest demonstrations of all time, opposing this particular piece of legislation as the thin edge for the wedge. But despite that, the Hong Kong markets seem to be hanging together very well. So here we are. The photo, wait for your screen to change. The photo on the left, that's the handover from the British to the Chinese. And that was the ceremony, and I put the angry, snarling Chinese dragon on the right to illustrate the change in Hong Kong's status. And it's, more and more of Chinese influence, which means less and less human rights in Hong Kong. How that affects the markets, we'll wait and see. But this is a part of the crowd. This is all happening this week. Smile on the face of the dragon. President Xi has that inscrutable Chinese smile at almost all times, but the reality is it's a very, very determined group of people. It's the Communist Party in China, and they're determined. This is the first of their provinces they're recovering, or the major ones since the war. This is now a Chinese province, and of course they have the same view of Taiwan, that they view Taiwan as a rogue Chinese province, and it is Chinese policy that they will recover that province to mainland China. So there's going to be, just another issue there. Every issue with China is contentious, because China is a real-time competitor, particularly to the hegemony of the United States. And it's a seriously aggressive competitor in trade, in finance, in global influence, in oil markets, NGO markets, all the important keys. Many of them are spinning around China. This is the Shanghai Composite. This is the, if you like, the mainland index. This is the index of basically China mainland domiciled public companies. And you can see it's in a very different position. And you really got the two faces of China. Hong Kong, excuse me, is its capitalist face, and Shanghai is the domestic face. It hasn't really achieved much at all. Here's Australia. This is the share price index, and you can see it's taken all these years since 2007, 2008. It still hasn't recovered the all-time highs, the boom highs, but it's it's holding its support lines, those dotted lines, and it's working its way up. It's one standard deviation below the mean at the moment, and if it holds that support, it has the opportunity to go higher. Does it deserve to? Well, it's a domestic issue. There are all sorts of tax rules that make it attractive to own Australian stocks and shares. Unlike the US, it's predominantly a dividend-based system. These companies pay very large dividends as opposing to retaining much of its dividend flow as they do in the US. So it's a bit different, but it's in a happy place. This is the most important chart to look at. This is UST bond. Many of you have seen this before. This chart goes right back to 96. And you can see that. You've seen it many times over the years. I show it to you periodically. You can see how this market has kept that Daniel Code trading channel so incredibly well. And if you observe the thicker of the blue lines, that's the median of the Daniel Code trading channel. We stopped that in October 2016, and the market has just continued to observe those levels in a most extraordinary way. If you look at the October 18 lows, where it's come down to two standard deviations below the mean, that dotted line's been on the chart literally for years. And the market came down and hit that exactly, and it turned around and rallied since then. Now remember, bond charts are the inverse, so in a market going up as it is now means interest rates going down, and vice versa. So that nexus in October 18, really extraordinary. It happened right at the price level that this dotted line had forecast. It happened one period before an 89 Daniel Code time cycle expired. These time cycles are valid for plus or minus one cycle, one period only. And it's really been extraordinarily accurate. What does it tell us from a forecasting point of view? Well, not as much as you think, but it's on its way up now in a very, very determined way for interest rates to go down, and it's basically trying to recover support, and its next really significant support is at the extended dotted line from the solid blue line median. In other words, quite a bit higher than it is now, or interest rates lower than it is now. I know that seems amazing, but that's what the chart's telling us. This is the US T-notes. This is the 10-year. This is the one that's been so much in the news and commentary that it's gone way, way past the Fed dot points. This market, the T-bond market, is forecasting as it goes higher. That actually means interest rates lower, remember that. This market is forecasting considerably lower rates. And the Fed, I don't think the Fed knows what it's going to do. Announcements this week were sort of, we'll ease some more if we have to. Well, I don't know why you'd even be thinking of easing them. The sort of the basis that T-bonds and bonds generally is talking about is that there must be considerable problems in the system that requires support, lower interest rates, more injection of liquidity, but the equity charts, the dollar charts, are not telling you that at all. In fact, they've just been monetized hugely by the very historic low levels of debt that we've had for at least the last 10 years. This is the next flashpoint, and this is actually the Straits of Hormuz. I hope I pronounced that correctly. This is the one of the most significant waterways for the export of oil. And roughly a third of the world's oil supplies come through this bottleneck, which gets very, very narrow. The distance across the Straits is only about 24 miles, which is very, very little when you think about these huge, massive, heavy oil tankers. But on the northern side of that is where the drone, the US drone, the Predator drone, the Q-7 Predator drone, was shot down today by an Iranian missile. Their argument was that it was over their territorial waters. The US said it wasn't, it was in international airspace. Now, this comes on top of the other, what else has been happening earlier this week and last week, that there have been attacks on a number of oil vessels. They've had mines attached to them, usually under the cover of darkness. The intention not to sink them, they're putting the mines well above the waterline, but it makes them, they can't obviously continue their voyage with a big hole in their side. And there have been a number of those. So this sort of level of tension, which is spinning around the Iran nuclear deal, which Obama, it's one of his legacies. Trump's undone it, and US is imposing sanctions on Iran to stop it selling its oil, and US is trying to get further concessions from Iran over and above the arrangements that were made with the Obama administration, on the basis that the present administration considers that was a very bad deal, and they're pushing for a whole lot more. And what's happening, of course, Iran's saying that we can close the Straits of Hormuz if we want to, that's the flashpoint of the current bits of tension. So think about this: the levels of problems there are. There's problems with Iran. There's problems with China. There's started more than budding, an ongoing trade war with China. There are meetings at the G20 later this month. Hopefully there is some relief on that, but at the moment you've got trade tensions with China. You have problems with Turkey. It's been a US ally, and it decided that it was going to buy its new air defense system. It's gone for the Russian S-400 system, and America said, we're not going to supply the F-35 fighters that you're buying, so it's impounded some of those, and lots of hurt feelings with Turkey coming out with a particularly bellicose announcement today, saying that if there are sanctions imposed on them by the US, they're threatening all sorts of consequences. There's another flashpoint for you. This is still the sleeper. I've talked to you about this periodically. This is what it's called the 9-dash line. And basically it's a chart or a map that had 9 dashes on it. And it covers pretty well the whole of the, used to be called the Yellow Sea, the South China Sea. And as you can see, they put the dotted line on this. They claim this is their territorial waters. They're actually running through the claims of everyone else: Vietnam, Malaysia, Brunei, Philippines, and they're claiming this is territorial waters, which would give them dominance and also economic rights. There's massive reserves of oil, gas, and all sorts of minerals in that great area, which is just a huge chunk of the ocean. China maintains that this chart was produced as part of the settlement of World War II, and it was agreed that that was their historical sphere of influence. Since then, that claim's been tested in the International Court, which has determined that no, China doesn't have that claim. There's no benefit to it at all, and China's blithely simply ignored that entirely. And what's happened on these shoals and islands, they're called the Paracels, the Spratlys, Scarborough Shoal, many of these, China has sent dredgers in there and built fairly small, insignificant reef-like areas up into substantial islands, big enough at least to get jet landing airports, runways into them. They've staffed them. They've got defense. They've got missiles on these islands. They've militarized them. And all of this has happened pretty well on Obama's watch. And it doesn't get talked about in that way, but you should be scratching your head and saying, what were these people doing for the 8 years that allowed this all to happen? And of course, now China is trying to enforce its claim. It's saying that vessels can't sail within territorial waters. They're trying to make no-fly zones, all sorts of things. And of course, the United States is rejecting that by carrying out what they call, incidentally, I have given up smoking, folks, back in December. So the little cough and splutter, you'll have to forgive me, it's hay fever. And it's Friday morning down under here. So the United States has said, well, we don't accept any of that. We believe we have the right to sail our ships, fly our planes anywhere that are international waters. We don't recognize your claim, and periodically they sail one or two or more of their warships through this area and even get within 12 kilometers of the various these little militarized islands. And of course, they're asking their allies to support them, and Britain is supporting them, and so is Australia. And the real catch-22 for those of you who live in this part of the world is that China is by far our biggest and most important trading partner, yet America is our ally under the ANZUS Treaty, and they're our shield and protector. So we're being asked to poke the Chinese in the eye by having these navigation exercises with Australian Navy warships that will breach their claims, and then on the other hand, we're saying, well, but keep buying the iron ore and the, in particular, the coal and everything else, won't you? That's a real, it's a real cleft fork for the government to deal with. So far, they've proved themselves totally inept. We've had in this country, as our foreign minister, a lady called Julie Bishop, who's a closet socialist, in my view, and who's really been little more than a clothes horse. She was deputy leader of the Liberal Party. She had a short spell as treasurer at one stage. They got rid of her very quickly. She's barely economically literate. And she spent the last few years as foreign minister swanning around the world with a new Chanel outfit on every week. She's literally just been a clothes horse. The media love her. The media love her because she represents the left wing of the Liberal Party, and media love lefties. And no one knows quite how extreme it is. I think I've talked about it before. She's an absolute disgrace. But that's been what's happening with the Australia-China relations, and China has got all sorts of ways of showing its displeasure. It was displeased about some comments that were made by Australian ministers, not terribly aggressive, but it just simply came up with a bit of bureaucracy that said, well, we can't clear the iron ore ships, and dozens of them are just swinging on moorings outside their main ports. China is very important to Australia in many ways. One of our biggest income earners is this terrible rort that the universities have been running, that once they pretty much deregulate their free enterprise systems, we have massive numbers of Chinese students at Australian universities, and they get preferential ways of getting residence if they're done a university degree at an Australian university. And of course, they make excellent citizens. They're very hardworking. They're very dedicated people. They're great money getters. They're law-abiding. I mean, they are, as refugees, or as not refugees, as migrants go, they're pretty desirable. So we're deeply enmeshed in our relationships with China. And there are some really hard decisions to be made going forward. So what's caused all this dreadful situation? Well, this all started with Bill Clinton, and I can remember he agreed to allow China into the World Trade Organization, and I was absolutely staggered. Not that that should make any difference. I'm staggered about all sorts of things, but it was really the uninformed consensus. I put myself in that category of being uninformed, but the popular consensus was you shouldn't be letting them into the World Trade Organization because they don't comply with any of the WTO rules, and their promises to do so may not be terribly effective, and you have no real way of enforcing them. So China got into the WTO on Clinton's approval. Everyone just dropped the ball, let them in. They've breached almost all of their undertakings since then in one way or another, with their predatory behavior, particularly on this transfer of technology issue that's such a big deal and should be a big deal. And then, of course, you had Obama, who, I don't know, sort of, maybe Bush had a bit of it as well. Bush was consumed with the terrorist threats, of course. But Obama, I think, took a holiday for 8 years to allow the trade situation with China to get so bad, to allow the development of these militarized islands in the South China Sea. He just was of no concern to him. It's extraordinary. And not challenged about it at all. So there we are, the joys of being a lefty. No one criticised you. Here's Trump. This is the guy who's wearing all the trouble now. And you know, it's absolutely true, a lot of what he says. He's had a terribly, terribly tough trot. He became president without any of the supporting personnel, the really experienced people, because they're all anti-Trump. They're all pro-Hillary. The very, very vast majority of them, and he had to rely on fringe dwellers, really. I mean, if you think of John Bolton as leading the foreign policy thoughts, I mean, you just shake your head. It's really scary. But that's the best that was available, because almost all the others have signed the Never Trump letter, or are dedicated to working against Trump. And the worst part of all this is the other guy in this picture, and that's Mitch McConnell, who's the leader of the Senate, the majority leader of the Republican majority in the U.S. Senate. And he has really been a very, very lukewarm partner. The general idea of U.S. politics is that new incoming presidents get 6 months or so to get their agenda through before the glow is gone. Well, Trump never had 6 months. They were against him from the first day. Paul Ryan was the Republican leader of the House at the time. He was definitely not a Trump supporter. And McConnell has really been pretty lukewarm. You see Trump's big initiatives of getting rid of Obamacare. Well, John McCain, the late John McCain, went rogue over that vote for some reason. Now lost to posterity and voted against his own party for personal hatred of Trump. McConnell's been a fence sitter. He didn't push at all for any funding for the border wall that Trump promised. He said, well, let's leave it till after the midterms. And of course, the Republicans promptly lost control of the House in the midterms. So this guy, Trump, has been left in limbo. The only effective power that he's able to exercise without, remember, under the American Constitution, these are supposedly co-equal partners, the House, the Senate, and the presidency. The long-term senators and House members, but a guy like McConnell in particular, they're very jealous to protect their privilege because they see themselves as equal leaders. You know, just the last couple of days, the Congress, the U.S. Congress, has come up with a bill to block Trump's administration's deal to sell arms to Saudi Arabia, which is the Congress's way of tapping him on the head and saying, "Hey, man, you're not running this show. You need our support and consent. And you don't have it all the time." Interesting that the only real sort of independent power that Trump has is to declare a state of emergency and then use the president's emergency powers. And Congress is rapidly getting to the stage of saying, well, you know, you can't go on just declaring a state of emergency when we don't think it's there. So there's a real conflict between the various branches. And it's not just Democrats against the president. It's the president's own party have been as much a problem as anything else. Here's the face of the smiling tiger or the smiling dragon. This is the president of China. And the guy with the head dress on is the Ayatollah Khomeini from Iran. He's the spiritual, well, the real power in Iran. They're the two of Trump's opponents, America's opponents, maybe Australia's opponents as well. That's something to think about, isn't it? On the happier part of the world, a bit further north, you've got the UK that voted under a very, very emotional circumstances to leave the EU after 40 years. And the blonde-haired guy at the front, that's Boris Johnson, who he led the Leave party that during the referendum to determine the vote on Brexit, whether Britain would exit the European Union or not. He's the pro-Brexit man. The guy next to him is Jeremy Hunt, who is running to oppose him. These are the two final candidates to be the new Prime Minister of Great Britain after Theresa May, who, I mean, it's an extraordinary story. But anyway, on the short version of it, Jeremy Hunt is a Remainder. He didn't vote for Brexit. He campaigned against it. He doesn't believe in it, but he now wants to put himself forward as alternate to Boris as the Prime Minister. The whole thing's been a total and utter farce. The short version, David Cameron was the Prime Minister. He was forced by his backbenchers into allowing a vote on the European Union 40 years after they'd entered. No one had any inkling that Britain would vote to leave, but they did, ably led mainly by Boris and Michael Gove, amongst others. Cameron resigned, as he had to, as Prime Minister. One logic would have told you that to implement Brexit, at the very least, they needed someone who believed in it, i.e. Johnson or even Gove or Leadstrom, perhaps. But no, the party was still controlled by the Cameronites, including this guy Hunt, and more importantly, the Chancellor of the Exchequer, the UK's treasurer, if you like. And the bulk of that party, the Tories, was still pro-Cameron, still pro-Europe. They chose Theresa May as sort of, I guess, as the least offensive candidate. She'd been a senior minister for immigration under the Cameron government, totally hopeless, totally useless, but they chose her not really for any merit, but because she's probably less objectionable than the others. And she's just been hopeless. Here we are years later, no Brexit. And the negotiations with the European Union have been dreadfully handled. I mean, for any negotiation, the only leverage Britain had was to say, well, we'll leave without a deal. That'll harm us and you. That was their only leverage. So Mrs. May did the opposite and said, we'll pass a vote in Parliament that we won't leave with a no deal. So effectively she had no weapons, no ammunition. Absolutely stupid. Bunch of amateurs. I mean, how Britain could get itself in this situation with its long traditions of a very effective, very powerful, very informed bureaucracy. I mean, it's just beyond belief. Anyway, these two guys are duking it out, and next month we'll know which one's going to be the new Britain Prime Minister. If it's Boris, who's quite a character, he's been a professional journalist, he's a scholar, he's a drinker, a player, a man, in my view, of very, very interesting qualities. Let's see what happens. There will also be interesting times for UK then. Let's have a look at the US dollar index. Trump, as you know, is a low dollar, low interest rate guy, but look how strong the dollar's been. You know, it's holding itself up there pretty well. It's strong because the US economy is strong. Here's a look at the daily just to show you this runoff. And interestingly, Harold, for you in particular, we know that gold is inversely correlated with the US dollar for large slabs of time. It's not a direct and always inverse correlation. It comes and it goes. And I told you some months ago that when that inverse correlation broke down, historically, it's always been in favour of gold having a boom, which is why we're seeing gold doing so well now, extraordinarily well. But if you look at the pullback in the dollar here, this is a daily chart. It's not that big, but you see the reaction in gold. It's many times this. You would expect the dollar, to be down in the low 90s, considering what gold has done. So gold is continuing to benefit from the inverse correlation relationship, and it's benefiting in a far bigger way than the pullback in the US dollar would suggest. Okay, let's have a look what's happening with all these currencies. Talking about raging currencies, there is a world fight to devalue, essentially. All the countries, most countries, like their currency to be cheaper against their trading partners because it makes their exports more valuable and their imports more expensive. This is euro, and you can see it's been weak since 2014. It had a rally, looked hopeful. Now it's just really bleeding off again. It is not as important as some of the other markets. This is the USD. This is a 3-day chart, and you can just see how historically weak this is. I mean, I know Brexit's knocked the pins out of it, and there's a whole lot of uncertainty, but this market is down, at levels you don't often see, and it's pretty determined to keep going down, in my opinion. This is the Aussie dollar. This has been my favourite short for years and years and years. I think every time we do our New Year webinar, which we've been doing since January 2009, I may even be a year out there, it might have been 2008. I say this is my favourite short, and it's sort of stalled a bit over the last couple of years, but look at it now, it's testing these lows. Yeah, I mean, it's almost impossible to believe that this market, the Australia, was worth $1.08 US back in 2012. I mean, extraordinary. But look at it now. The spike you can see there in December, you'll see that on a lot of other charts as well. What that was a Monday where the Tokyo Exchange didn't open, and it caused a flash crash in a whole lot of currencies. And we'll come back to that. You'll see more of that on the daily chart. This is the dollar yen, so this is the other way around. Look how strong the dollar is against the yen. Now, Japan, like China, enjoys massive trade surpluses with the US. They haven't, Trump certainly mentioned it, they haven't sort of come under the limelight the way that it's happening in China, but all of these countries are running, well, not all of them. Australia actually doesn't, but Japan, China, Taiwan, they run massive surpluses against the US. So does the euro, so the European countries. So this is that little, this is the daily, this is a 2-day chart of the Aussie US dollar. I just want to show you this dotted line I've put on is the old low. This is the December 2015 low. And then in very late October 18, November probably last year, we had that flash crash. You can just see that one bar down straight back. That was then supported again by government. But we're right now, and that's the last level of support on this chart for quite a while. If we get a break of that, it's going to tell you two things. Australia's economy's in real trouble. No one knows it. It's a bit like the US. It's got this dichotomy. Property prices have gone absolutely berserk in Australia. I mean, the average price, an average home, and when you see what the average is, you wouldn't want to live there. $1 million in Sydney and not far off that in Melbourne, the two big capital cities. I mean, it's just total rubbish. But anyway, it's what happens in property booms. But this country is very, very vulnerable because the level of household debt is absolutely immense. We've made such a mess of our energy policy. Australia should enormously rich in coal, gas. It's literally now the biggest exporter in the world of natural gas, massive coal resources. Our electricity is amongst the highest in the world through political action. A lot of these generators are owned by government, state government, and they're just a feeding spigot for the for the government. Terrible, terrible thing. The consequence of that, of course, is we've destroyed our energy benefit that should have been the edge, an economic edge for this country, same as New Zealand should also have benefited by having cheap electricity that would allow a big manufacturing base. And in fact, the opposite's happened. The electricity power prices in this country are so absurd now that manufacturing essentially has been hunted out of the country, and it's gone largely overseas. Very bad policy. This is your big winner out of all this policy stuff. This is gold. Look at it. You've seen this chart before. I've kept this for you for years and years. And we had a fourth seal line there that gave us the January 2018 high. Nothing to do further on, but look what's happened. The market's run straight up and gone exactly to that red line across towards the right-hand side of the page. And this has been just a terrific breakout. And we talked about this at one of our webinars, saying that gold was benefiting in inverse proportion, more than its share of this inverse relationship with the US dollar. It's pretty fantastic. That's a really, really strong movement. Interestingly enough, silver is not following it. There's a big disconnect between gold and silver. Gold is showing tremendous strength and silver is not. So given that, I guess that's the enthusiasm of gold bugs, who always maintain that gold's a safe haven, and perhaps it is. This is corn, folks, and this is another market that's having an absolutely tremendous run, but don't mistake this for anything to do with currencies. Corn is roaring up because of the dreadful problems in the Midwest with the flooding, and so much of the Midwest and the big traditional corn growing areas of the US have been flooded, are wet, are soaking, that maybe less than 50% of the annual corn crop has been planted. It's just been too wet to get the tractors on the ground, and of the stuff that has been planted, the stuff that's coming out of the ground now, it doesn't look good. It doesn't look well. It looks fairly sick. So you really, really need to hope for a very, very dry summer. Try and get this what part of the crop's in the ground there at least to grow. So that's that. I think that's the real idea for it, folks. If you want to be able to learn to do all this stuff yourself and be a super trader, email me, jneedham@thedanielcode.com. We do training tutorials as you require them, and at the moment they're all being done by video. Work very, very well, but if you're interested in learning how to trade and analyze markets, do send me an email, please, jneedham@thedanielcode.com. Let me know where you live so I can work out what the time zone is. Send your phone number and I'll give you a call. We can have a chat about your trading and what you'd like to do with it. Those of you who haven't already, go ahead and have a free trial. Just go to the website, click on the free trial link that's up there. If you have not already used Trade Navigator software, I use them all the time. We can arrange a free trial for you as well. And before you all disappear, there's Janet. Hi, Janet. Before you all disappear, I'm going to show you the compliance statement. Always show that. You take it seriously, folks. It's very, very easy to lose money trading if you don't know what you're doing. And you can lose a lot of money quite quickly. Let me get rid of this because I want to show you something else. Take a quick look, if you like, at the success. They have absolutely been roaring. Out on palladium for over $14,000 our last trade. Pretty fantastic. And here are our other positions. We're long the S&P and have been for quite a while. We're stopped out of soybeans. We're short sugar still. T-bonds, it's been up and down the last couple of days. And wheat, we're short. and to get a free trial, have a look at the success. It's been extraordinary. It's been making a great deal of money. Okay, I think that's it, folks. Thank you for being with us today. It's always a pleasure having you with me. I always enjoy your company, and you can go to the Daniel Code website. You can see there's a button there that says the Daniel Code free trial. Click on that. Terry will be happy to organise a free trial for you of anything you wish. Thank you for being with me, and I look forward to talking to you in a fortnight. Do pay attention. I think we're going to have a very, very important announcement to make for you in a fortnight, but we'll talk about it a bit before we get there. Enjoy your weekend. Bye-bye.